Saturday, April 8th, 2023, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at boom and bust and why government and central banking interference in the economy and the markets are actually the worst thing that they can do. Over the long term, I'm going to prove to you that it's been a disaster and it's going to lead eventually to currency destruction. It could be in a month's time, it could be in a year, 2 years, but I don't think it's going to take much more than 3 to 5 years. And it's really simple to show you that the free market does a much better job. And I found this by accident looking at some data today. But before we go into it, I just wanted to give a shout out to a company called Swift Refunds. They're a UK-based accountancy tax advisory firm, and they help mobile workers in the UK claim back on average up to 4 years and £2,500 from HMRC. So if you're a mobile worker in the UK, make sure you check out the link below in the description of this video to find out more about Swift Refunds. So back to boom and bust. I was doing a little bit of research today. Yes, Rudy's okay. We have had a very good day. Rudy, my wife, and we've been out in the garden doing a lot of work in the garden, and Rudy had a good time. He's been out for a few walks, but right now he's somewhere else. But anyway, as I said, I was doing some research for another video that I'm going to make about UK house prices, the gold price, interest rates, inflation, and what I see going forward. And I got some RPI data, retail price index. And why do I use RPI? Well, RPI used to be the inflation kind of indicator that used to be used in the UK up until the late 90s, and then New Labour came to power and they came up with this CPI. But RPI is a much better reflection of the cost of living for the average household in the UK, and that's what we want to look into, really. And any inflation data prior to the late 90s do not reflect, the current measurement of CPI, and even the CPI is in double digits, right? But the ONS, believe it or not, they keep RPI data all the way back to 1800. So I plotted all the data on this chart here, as you can see. And from 1800 to around the early 20s, it was very volatile. As you can see, it was like a roller coaster. And it might look like it was a disaster, that things were all over the place. And they were. But just hold on a second and I'm going to show you that it wasn't. So as you can see here, I say Keynesian economics and the smoothing of boom and bust cycles lead to currency destruction via inflation of the currency, of course. Some people argue that Keynes didn't really want to interfere that much, but be as it may, it got us onto that road of government interference, the welfare state, stabilizers, kickstarting the economy. And as you can see from this chart, after the 1930s, RPI has never been negative except briefly during the 08 crisis there. It's always been positive. And of course, this is the percentage annual change from 1800 to 2022. So if you look at this chart, you might think that the 1800s was a mess, right? It was chaos. But actually, it was one of the most productive centuries. We got the Industrial Revolution, Yes, people weren't as wealthy as we are now, or the standard of living wasn't as good, but the growth or the improvement in the standard of living from 1800 to 1900 was huge, not just in the UK, but throughout the world, especially Western Europe, North America, and even South America. So the interesting thing about this data set is that you can find the average, of course, in the Excel or number spreadsheet. So what I decided to do is to look at what the RPI average annual change was from 1800 to 1914. Why 1914? Well, because after 1914, everything changed, right? Because of World War I. Britain, most of Europe went off sound money, a gold standard. We lost a lot of our silver coinage here in the UK. But as you can see, the average percentage annual change was only 0.2%. And it just goes to prove that the free market, the invisible hand of the free market, free enterprise, small government, usually finds a way. 0.2% over, I think it's 115 years in total, 1800 to 1914, 115 years. Amazing that the average percentage annual change was 0.2. Yes, the minimum of minus 23 was in 1802. The maximum was 36.5% in 1800. That's to do with the Napoleonic Wars. Unfortunately, yeah, a lot of the big moves have to do with wars. So let's look at 1914 to 2022. And you'd think now we have PhD economists. We have Nobel Prize winning economists. We have a whole bunch of, bureaucrats tinkering with the economy. We got huge budgets. We have huge government interference. And despite all of this, look at that average annual percentage annual change in RPI has been 4.8%. So there you go. It just goes to prove that what interfering in the marketplace and in the economy does is destroy the currency. And that's why I am not optimistic about what's going on now, because we're not seeing the end of interference. We just saw the Bank of England last year, September, October time, interfere in the markets. We're seeing governments interfere, especially here, but also in the United States. The Federal Reserve just pumped $400 billion onto their balance sheet, even though they're supposed to be cutting down their balance sheet. But I actually think there's very little hope that things are going to improve. And the more management interference trying to smooth out boom and bust, the worse things are going to get. And that's why I don't have much hope for our currencies, and they're going to continue to be debased. So I've also looked at something that I think is interesting to look at, 30-year periods, how the RPI did. And why 30-year? Well, because usually it's how long an adult needs to save and maybe think about retiring, especially in the 19th century, because people didn't live as long. So I went through some periods here just to give you an idea. So from 1800 to 1829, the first 30-year period, RPI was up 0.8%, which is quite a lot for that period. But that was because of the Napoleonic Wars. And then from 1830 to 1859, the second 30-year period, it actually dropped by 0.2 on average. So that was a good period for purchasing power. And Also for people who work for 30 years, for example, and they saved. Savings actually was something that was worth having. Unlike today, of course, in fiat currency, that is. And then from 1860 to 1889, it was flat, 0 RPI growth, annualized. From 1890 to 1919, 30-year period, 3.3. So what happened there? Well, it was because of World War I. It started in 1914, of course, lasted until 1918, but the effects of that inflationary period were felt all the way until the early mid-20s. So I did 1890 to 1914. That's a 25-year period. It was 0.5. Not great, but better than 3.3. And then we come to 1915 to 1944. Those 30-year periods was 3.6. 45 to 74 was 5%. And really the worst period since 1800, 30-year period in terms of purchasing power, has been from 1975 to 2004. That was 6.7%. And we're told that the Bank of England became independent, right? Central bankers have defeated inflation, but that's all baloney. It's all deception, and we're going to look at that in my other video that I'm going to make soon about house prices, the gold price, interest rates, and RPI or inflation. So in the last 18 years, since 2005, RPI has averaged 3.4%. So there you go. Sometimes the simplest things, a few charts, some data, is the best way to prove a theory and to prove that something is completely wrong. And by that I mean the argument that the free market, we can't have a free market and allow the general public to run things, that government has to interfere and be there to kickstart the economy or smooth out boom and busts. That Keynesian philosophy, right? I didn't have to write a 300-page book with loads more charts and equations and things just to make people go to sleep. This is very simple and actually is using government data. So there you go. Hopefully this will help you understand what's going on, that things are not going to get better. Our fiat currencies, our pound, our dollars, all fiat currencies are going to continue to lose a lot of ground. And that's why I'm continuing to stack. If you're looking to stack, of course, make sure you check my precious metals dealers partnerships below in the description. So with that, I wish you all a great rest of this Easter weekend. Take care. Bye.